Hello, everyone, and welcome to the session. It is my pleasure to introduce Michael Golembesky, Senior Analyst at ElliottWaveTrader.net, who also has an extensive background in real estate investing and finance. Michael has a great presentation in store for us today. So, to our live viewers, if you have any questions throughout the session, please share them in the live chat. Time permitting, we'll see if we can get to any of those at the end. And with that all said, Michael, I'll hand the mic on over to you. I'll be here if you need me, but the floor is all yours.
Thank you very much. Hi, everyone. Thanks for joining us. So just a little bit about myself before we get into the presentation. I'm a senior analyst at ElliottWaveTrader.net. My primary focus is on the U.S. equity markets and volatility markets. I also host a trading service at ElliottWaveTrader.net. I'm a syndicated author on MarketWatch, Seeking Alpha, as well as NASDAQ.com. All right, so in this presentation, we're going to talk about a few different things. The first thing we're going to do is we're going to talk about Elliott wave theory and wave personalities. We're going to talk about volatility analysis and how it's important in identifying setups. Going to go over the basic understanding of option trading and the benefits of using options. We'll identify some high probability trade setups using Elliott wave and volatility analysis. And most importantly, we're going to talk about some risk management techniques while using simple option strategies that pretty much anybody can follow. So the method behind the analysis, we use Elliott wave analysis to analyze the U.S. equity and volatility charts. Elliott wave theory postulates that social mood is driven by unconscious and endogenous forces fluctuating repetitive and fractal patterns. Periods of positive social mood result in rising stock prices and economic expansion, whereas periods of negative social mood result in declining stock prices and economic contraction. Social mood follows repetitive and predictable patterns that can be measured and tracked using financial markets. Fluctuation of stock prices is the result of changes in that social mood. We can measure and track social mood by applying Elliott wave analysis charts of freely traded financial instruments. The basic patterns of Elliott wave are numbered at 1, 2, 3, 4, 5. And these are the trending moves which unfold in 5 waves, and they're regarded as impulsive. Counter trend interruptions are unfolded in 3 waves and are regarded as corrective. Impulsive structures are labeled with numbers, again, 1, 2, 3, 4, and 5, whereas corrective structures are labeled with letters, A, B, and C. One of the additions that we have specific to Elliott wave trader is the addition of Fibonacci pinball. And what Fibonacci pinball does is it allows us to predict the price extensions based on our initial wave 1 pattern. So identifying our initial wave 1 with our 5-wave structure, 1, 2, 3, 4, and 5, we can then lay out our Fibonacci extension patterns, and we can then fairly accurately predict where our price targets are going to land as we continue to unfold in our larger degree fractal pattern of Elliott wave. So we have our wave 1, and then we have our wave 3, and then we have our wave 4, and we have our wave 5. Within our 5-wave structure, we have subwaves within that 5-wave structure labeled 1, 2, 3, 4, and 5. And these patterns follow a fairly predictable price structure following our Fibonacci pinball patterns. And this allows us to get, again, fairly accurate price predictions and targets prior to even entering a trade. Elliott wave also has its own characteristics and personalities. So each wave will display its own unique personality and characteristic. These wave personalities can be useful when trading and can be especially helpful when we're trading options. Wave 1 is considered the initiation wave, meaning that it begins with an impulsive sequence. Again, within this wave 1, we have a 5-wave structure, 1, 2, 3, 4, and 5. During this wave, prices will begin to bounce higher after a sustained downtrend. The sentiment in the markets is usually very bearish at the start of this wave 1, and the fundamental and economic news is predominantly negative. As the wave 1 moves higher, most people see this upside price as just a bear market rally, and many investors and traders consider the wave 1 as a good opportunity to initiate a new short position or add to their existing short positions. Wave 2 will move lower as most traders will continue to add to their short positions and remain bearish. The news at the end of the wave 2 swing low is often more pessimistic than the start of the wave 1. So oftentimes we'll see more bearish news here than we will here. Most traders are not prepared for the eventual turn in the market, which will begin to lead prices higher. Those who are prepared will be well rewarded for recognizing the extreme pessimism and the oversold market conditions. Once all the sellers have placed their bets, there's nowhere else for the market but to go higher. Wave 3 offers the largest potential for profit, as it usually is the biggest and most powerful wave within the overall Elliott wave structure. This is our wave 3. Although many of the earlier bears will still resist the optimistic outlook during the early stages of the wave 3, it will become increasingly evident to most traders that the tide has shifted and the markets are poised to move higher. Upon the break of the swing high wave 1 here, prices will begin to accelerate upwards as more and more traders recognize the bullish sentiment and will start taking long positions. Additionally, many of the bears who have shorted this wave 2 will have their stops triggered at this wave 1 swing high, which will add to further fuel to the upside price thrust as they stop out and cover their short positions. Wave 4 is often seen as a profit-taking wave because those traders who jumped aboard the trend early in wave 3 are sitting on healthy amount of profits, and many of these traders will begin to liquidate their positions and lock in their profits. This can result in sideways price movement that may last for an extended period of time. Wave 4 brings with it whipsawing price action that often generates false breakouts on either side of the market. Wave 5 is the final leg within the Elliott wave impulse structure sequence. The momentum behind the bullish activity in wave 5 will be less dynamic than is seen during a wave 3 progression. The velocity of that price movement will be more subdued than during the wave 3. And it's during the late stages of this wave 5 that we'll also see a technical divergence pattern form between price and technical indicators. Often we'll see a negative divergence on the RSI or the MACD. So this is an example of a real-world example of Elliott wave in action. And this is the NASDAQ chart. And this is starting from the 2002 low that we saw on the NASDAQ. And we can see that we have a 5-wave initial sequence here. We label wave 1. We have a retracement for a wave 2, which is corrective here, A, B, and C. And we can see that that retracement came just shy of the 61.8 retracement level of our wave 1. From there, we saw price begin to accelerate higher, and this resulted in a wave 3, which hit our 161.8 extension of our wave 1. So we have our 1, 2, and we lay out our Fibonacci extension tool here, 1, 2. And our wave 3 hit right in the middle of our ideal target zone for our Fibonacci pinball sequence. And that's the 138.2 to 176.4. Our wave 3 hit right in the middle of that zone at the 161.8. We saw a corrective retrace A, B, C for wave 4, which held over support at the 100 extension of our wave 1. And then it proceeded to extend higher for our wave 5, which landed right in the middle of our target zone again for our wave 5, our 200 extension to 261.8 extension, before we saw a top in our wave 1. From there, we saw fairly deep retrace for a wave 2, and that was again labeled as ABC, so A, B, and C. And this move, being a 3-wave corrective move, then allowed for another long opportunity, which we saw happen in 2008. And this then low at the 1,000 level led us all the way up to where we currently are in the markets today, which we can see in our longer term chart. So again, this was our 2008 low, and then we saw a very larger degree 3rd wave that has progressed all the way to where we are sitting currently. We're currently sitting over the 23,000 level in the NASDAQ. So again, our initial wave 1 up, 1, 2, 3, 4, and 5, our ABC corrected move, ABC. Another wave 1 up, 1, 2, 3, 4, and then we're currently on our larger degree 5th wave up here in the NASDAQ. So again, the sentiment is very bearish at the start of the wave 1. Economic news is predominantly negative. At the bottom of the wave 2, the news of the wave 2 is more pessimistic than we saw at the start of the wave 1. This is the bottom of the financial crisis, very pessimistic. So most traders not prepared for the eventual turn of the markets, which will begin to lead prices higher. And that was certainly the case in 2009. We saw the swing break of the wave 1 high here. We still saw people attempting to short the market here, thinking that we're going to see at the time, a double dip recession was the kind of the news of the day at this time in 2011. And that's when things really started to accelerate higher. We saw the market continue to push significantly higher on very shallow retracements lower, all the way up until we saw a wave 4, which here this was the COVID crash here. Again, looking at a larger term chart, it looks like just a blip on the screen, but that was a wave 4, and now we're currently in our final degree of our wave 5. So again, wave 5 is considered a retail wave. It's when a lot of retail investors flock to the markets, which we're starting to see now. And this may be the end of a much larger trend that we're seeing in the markets. So Elliott Wave and Volatility, we primarily apply our Elliott Wave counts on the volatility markets, exchange traded products, specifically the VXX. The use of these volatility charts allows for both trade setups on those charts directly, and it also helps confirm and give a higher degree of confidence in the setups that we're watching on the equity charts. This can be especially helpful when volatility and equity charts are diverging. This is an example of a VXX chart, chart to the downside, and we can see that this also follows our Fibonacci pinball patterns fairly well. So we have a wave 1 and 2, and from there we can lay our Fibonacci price extensions out. 1, 2, 3, 4, and 5. Again, hitting all of our targets fairly well here. Wave 3 just under the 176.4 extension, our wave 4 right in between our 123.6 and 100 extension, and our wave 5 hitting the 238.2 extension. So this is a fairly clean chart that we could trade to the downside using our Elliott Wave analysis on the VXX directly. So understanding the basics of options, and again, we use options in the service that I run at ElliottWaveTrader. And options are a great tool to use with Elliott Wave. So understanding just the basics of options for those who are unfamiliar. An option contract is a contract that gives the buyer the right but not the obligation to buy or sell the underlying asset at a specified price on or before a certain date. This contract will rise and fall in value based on a number of factors, but is usually most heavily affected by the price of the underlying instrument. Option buyers will pay a premium for that option contract based on a wide variety of factors, including time and overall market volatility. Options can either be exercised, at which point the owner of those option contracts will be assigned shares of the underlying instrument, or the option contract can be sold for a greater or lesser value than the original purchase price. Pros of using options: risk can be very well defined ahead of time. Minimum and ideal targets can be well defined in advance, again using our Elliott Wave analysis. Outside returns can be realized, and they can work very well in conjunction with Elliott Wave analysis, again, because we have very clearly defined price targets prior to even entering a position. Some of the cons of using options: both price and time must be factored into the trade. Can lose all the premium paid for the option contract. And options can be tempted for traders to gamble with the potential outside returns. To succeed consistently, traders must be able to defy the expectations of sellers of the options, so we need an edge. And that edge is Elliott Wave. So again, our Elliott Wave characteristics and personalities. The best place to typically buy an option contract is our wave 2. So again, as the market moves lower, most traders will continue to add their short positions, remain bearish. The news will at the swing low will often be more pessimistic than the wave 1. Most traders aren't prepared for the eventual turn higher, and those who are able to be rewarded. So this is where Elliott Wave really starts to work really well with option contracts, because at this point, the price of those option contracts typically begins to drop fairly low to where we can see very outsized returns in our wave 3. One of the big advantages of using Elliott Wave and options together. This is an actual trade example that we executed using the SPY. And again, we saw this was a short-term option trade. It was just a few days. And we saw an initial 5-wave sequence, 1, 2, 3, 4, and 5. Corrective retrace for wave 2. And we hit right into our standard target zone for our wave 2. And we initially label this 2/B because we don't know if we're going to turn, if this initial move is going to turn to a C wave or a third wave. We assume it's going to be a C wave, and we see extensions higher for a third wave, which gives us a bonus. So in this case, we hit our 61.8 retracement of this initial wave one, and this is our ideal spot to enter a position. And when we're using our options trades and the service that we provide, we lay out an options workup is what I call it. And this gives us all the different strikes across various different dates. And we can see, based on our highlighted examples here, this was the ideal option contract to choose for this particular trade. If we hit our ideal target zone here in our wave three, we're going to get about a 500% return on that option contract. If we only make it up to our wave C target, we're going to get about 100% return on that option contract. Both good returns, but we always ideally would like to see more than 100% of what we pay for the contract. But at a minimum, we would see 100% return if the trade does indeed fall through to the upside at all. So looking at this trade again, so we have our wave 1, 2. We see our potential returns for this particular trade. Again, with our target zone is going to be 476 in this example, which is right at that 161.8 extension. Our minimum target is going to be at a 100 extension here, which is our standard target for a wave C. So if this turns into a C wave and we stop at the 100 extension, we're going to be our target at the 472 level. But again, our ideal target is going to be that 476 level here. So seeing fall through on this particular trade, again, the sentiment was very bearish at the start of this move. Our wave 2 ended up here, and the news was more pessimistic. And most traders are not prepared for the eventual turn. This includes option contract pricing as well. So we can see this trade did fall through, and we were looking for this, what was going to happen at the 100 extension here at the 472 level. We were able to break through that 472 level, which then gave us a good indication we're indeed in a wave 3, looking for our wave 3 target zone here. And at that point, we could then take a nice profit on this particular trade using our option contracts and our setup that we had worked. So this particular exit we exited at on January 8th. We took profits at the bottom end of the target zone for the wave 3, and we grabbed a 300% gain on this particular trade, which was a good trade for this particular setup. And that's just one example of many that we have for using Elliott Wave and options. So risk management is something that is extremely important in being a successful long-term trader. It's something that many people don't talk too much about, but it's more important than anything else that you're going to do as a trader. You can have the best analysis, you can have the best setups, and you can blow your account up on one trade if you don't use proper risk management. Because we're dealing in a game of probabilities, we're not dealing in a game of certainties, and even the best setups are going to fail a certain percentage of the time, and you always need to apply proper risk management to have overall long-term success in trading, regardless of what system you're using, Elliott Wave or any other system. So because Elliott Wave gives us an edge, I utilize an all or nothing type approach regarding trading options. And what that means is the premium that we pay for the options is the total risk. So whatever a trader wants to risk of the total account, that would be the amount of premium that you buy. So if the option contract goes up 300%, then your account percentage would be the risk that you took on your account times 300%. If the trade doesn't work out, then you lose whatever percentage risk you chose to risk on that account. So for example, if you wanted to risk only 2.5% of your total trading account value per trade, then you'd buy option contract equal to that value. So in that particular case, a 300% gain would give you a 7.5% gain in your account on that one trade. If you lose that trade, then you lose 2.5% account value on that particular trade. And these numbers can be modified based on your own personal risk profile, what type of account you're trading, how conservative you are, how aggressive you are, your account size, any number of factors. And we have traders in a room that risk much lower than that, and some that even risk higher than that. I wouldn't recommend risking too much higher than that, but we do have some that have a very aggressive profile and are able to risk more than that. But that's the basic gist of it. So you'd want to risk whatever you're risking on your account. You just buy that number of option contracts. So for example, if you have a $10,000 account and the option contract is $1, and you wanted to risk 2.5% of your account, you buy $250 worth of option contracts, and your loss would be either $250 or $750 on that one particular trade on that 10,000 based on that trade. So if the option contract goes to zero, that's your total loss. You lose all the option contract. If it goes to 300%, you gain 300%. And that's the how we keep things very simple in this particular method and system that we've developed in our room. So again, in our service, we provide trade setups in SPY, QQQ, IWM, and VXX. We highlight the optimal option strike, which I showed a few slides ago. We give guidance throughout the trade. We don't overload traders with setups and have a goal of 3 or 4 high probability trades per month. And this approach has led to many happy members who've seen excellent results over the years that we've run the service. If you're interested in learning more about how we run this service and learning more about this system, you can find us at ElliottWaveTrader.net. These are some of the comments that we've seen over the years from some of our happy members. And I'll go ahead and open up to any questions. I think we have a few minutes left. We may have.
Thanks, Michael. I'll give the audience a moment here to catch up with us. We don't have any questions in the chat just yet, but they are a few moments behind. So if you're listening to me now and you're watching this session live, feel free to share any questions for Michael in the live chat box now, and I'll go ahead and pass them over to him. And then, Michael, while we wait for them to catch up, are there any interesting things you've come across lately, or maybe some news that you think our audience might benefit from hearing about, or just frequently asked questions you tend to receive?
Currently, what we're seeing in the markets is we're seeing a very corrective wave pattern all the way up to the upside. And what we're expecting is that this market will result in a sharp reversal. The question we have right now is when that's going to happen. The market's been grinding higher. It's been a bit frustrating to trade on a smaller time frame just because we've had a lot of corrective wave action and a lot of grinding action. This typically results in a sharp reversal. It's a pattern that I didn't discuss too much in this presentation, but it's something that we watch carefully. That's called an ending diagonal pattern in Elliott Wave. And so we watch these corrective when things are moving in those ABC sequences to the upside. That typically results in a sharp reversal. Again, this market may still continue to extend, but when that extensions do finally end, we are expecting a fairly sharp reversal. But again, we're still kind of waiting on some indications on when that reversal will happen. But that will provide us with some good opportunities, especially in our options trading, because again, most market participants aren't expecting that type of a move, and they're going to continue to follow what the trend is doing, and that's when we can really see some good advantages when using option contracts.
Thanks, Michael. I have a question here from Gerard in the chat. He's asking for your near-term outlook on Bitcoin.
I don't track Bitcoin closely. We do have other analysts in our site who do that. It's not something that I track closely, so it's not something I can really give an educated opinion on. But we have several analysts, and Ryan runs a service at ElliottWaveTrader who we would much more apt to be able to give a good opinion on that.
Mm-hmm. All right. Thank you, Michael. Well, it looks like that's all we've got for questions right now. Now, I know we do still have a few minutes left here. I wanted to ask you, is there anything that you are excited about in the coming months that you think we should keep an eye on, maybe?
Yeah, as I just mentioned, we do have what's developing as a larger, what we call an ending diagonal pattern. Again, those typically result in sharp reversals in the opposite direction. So we're watching that closely right now. And again, that could result in some very outsized returns in our option trading. Typically, those types of setups can result in tenfold returns in our options trading. So it's something that I'm watching very closely. The last one we had similar to this was August of last year. And that particular setup was a very, very nice setup to where we had a sharp reversal in the markets, large move in volatility markets, and we were able to capture those gains quite nicely. I'm seeing something similar in the markets now. to where I'm expecting a sharp reversal. Again, it may not be in the imminent future, maybe a few weeks out, maybe a few months out, but it's something that I have on my radar right now. So that's something that I'm watching. And again, it's just a matter of having some initial signals of that pattern following through, and we'll need to see some break of support and some other indications to signal that has begun. But that's the big thing that I'm watching right now, as far as that's exciting from an options perspective.
Oh, fantastic. Well, Michael, thank you so much for joining us today. I have just one more question for you here from Asha in the chat. She's wondering if you guys at ElliottWaveTrader.net have any hands-on training for amateur traders.
We do. We have a whole education section in our site that will allow new traders to learn just about every aspect of trading, from Elliott Wave analysis to risk management to technical analysis. It's not necessary if you can follow our analysts, and you just need to have the basic understanding of Elliott Wave to really follow the analysts. We have many analysts on the site, but we have a whole education section on the site, which is included in the membership.
Fantastic. And she followed up actually asking what is included in that $99 membership. Yep. I think you just perfectly covered that.
Education along with analysis.
Fantastic. Well, Michael, thank you again. Once more, it's been a pleasure having you on. Fantastic presentation. I did go ahead to anyone who is watching this live. I've pasted this link that Michael shared on his screen into the chat box. If you cannot see it, just go ahead and type something in the chat box and hit send, and you'll be able to see then. Now, with that all said, thank you all so much for joining us. We do still have one more session after this, so be sure to stay tuned. And if you're looking for something to do while you wait, you can check out our Available Now section or the virtual booths in our virtual hall. Michael, until next time, it's been wonderful having you present with us. Thanks for sharing all of this information.
So much.